What's up, everyone? So I'm back at y'all again with another dividend paying stock. Now, this one's a high yield dividend and it's going to be a REIT. But before I get into all that, I need to tell you my requirement and why I am building a dividend portfolio. Yes, some people say dividend doesn't give you the best return, but I'm trying to build a dividend portfolio for passive income, for a bridge account, and this isn't my retirement account, so it's just extra income for my future. So what is my requirement for my dividend portfolio? Number one, it has to pay dividend. What's the point of being a dividend if it does not, or what's the point of it being my dividend portfolio if it doesn't pay dividend? Makes no sense. Number two, has to be in good financial standing because I don't want to own a company that doesn't pay me or has a good financial standing because I want ownership of a company. Number three, it has to have good growth opportunity. I'm not going to buy a company that's barely making it by or just barely growing. I want good growth opportunity. Now, before you go into all this, comment down below what you think about all that. What's your requirement for your dividend portfolio or your stock portfolio? But for me, those are my requirements.
For passive income. Passive income looks like this. You take money that you can afford to go to zero and you put them in the two places that have historically created passive income. Public markets that you don't care if it goes up and down and you just wait to the end, or real estate. And you hope that your real estate area doesn't get crushed. Everything else almost doesn't exist.
Now, here's the thing about it. Not everyone's going to have the same investment idea. Not everyone's going to have the same way they analyze stocks. For me, I do a very simple way to analyze stocks. I do not make it too complicated. I don't read candlesticks. I don't do all that stuff because it's pointless for me. After I read Intelligent Investor, I learned, hey, let's just keep it simple. I want ownership of a company. Let's see what this company can offer. And what would I do if I wanted to go buy a company? So that is what I do. Before I buy a company, this is exactly what I do. And this is what you need to understand. You can do whatever you want. You can make it complicated. But if you do that, guess what? You're just going to make your life harder. And let's get into this.
I rejiggered my mind and when I read the book, The Intelligent Investor. And from that point, I never bought another stock. I bought businesses that happened to be publicly traded.
Stock. Looking at today is 2. And 2 is a REIT investment company. They look like they just invest in real estate. So let's look at it. Talent, benefit, wellness, culture. I know nothing about this company. So this is one of the stocks I found off a Good Morning Investment or whatever, one of the website. I Googled it to see if I can find it because I wanted to add a REIT to my portfolio just to diversify a little bit more. But yeah, they just looks like they're just a company that deal with pretty much real estate investing. So let's look at this. Well, we are a lending resident mortgage REIT, so they lend to people.
Two Harbors is a publicly traded mortgage REIT that was founded in 2009. We invest primarily in agency mortgage-backed securities and the agency mortgage servicing rights. We believe we're experts in managing interest rate risk and prepayment risk associated with those assets.
Okay, that answered my question what they are, and they've been founded in 2009. They operate platform Round Point Mortgage Servicing LLC, and it's one of the largest service convenience loan in the country. Okay, they're a loan company. Now I know what they are. Let's look at the MSM. Let's see if they've been growing, if they pay a dividend. I know nothing about this company, and if I was going to purchase this company, I would want to see the growth for the last few years. So year to date, it's negative 11.67. That's not good. 1 year is negative 20.95. That's still not good. And 3 years is negative 48.57. That's not good. And for the 5 year is negative 50.14. Maybe the finance look better and it's a good growth opportunity to get in right now. Maybe this number doesn't tell the full truth, but this is why we need to look at the finance. But before that, let's look at the dividend history and see what they've been up to. So the dividend history, they pay a 17.22%, a $1.8 a year. That's a really big dividend, but they have a negative dividend growth. So a 17.22% a year, and the 1 year is negative 20.95. So you are about a negative 2%, 3% a year of growth on it. So you lose about negative 3% a year. Of course, to that if you do a 1 year. If you do a 3 year, you times it by 3, see how it works out, and see the growth. But I'm not gonna do all that. Just the 1 year growth, I compare it. It shows that it's going to be a negative 3% a year if I follow the chart and compare it. So yeah, let's look at the finance. Like I said, I like to use MSN for finance because it tells you what it is. And the very first thing I like to do is see what they've been doing year over year. From 2017, they grew, they dropped, they grew, they grew a little bit. They dropped in 2021 by quite a bit. They grew in 2022. They barely grew in 2023, and they really grew in 2024. So it looks like they might be going on the uptrend. But let's see what the growth margin is. So the gross margin, if you don't know what a gross margin is revenue minus its cost of goods sold, the percentage of revenue. The higher gross margin is better. And it has a 44.87% gross margin. That's a really good gross margin. With the net profit margin, which means after all the transition, what profit they have is 26.18. That's a really good profit margin. So if you look at that, their books, they look good on making money. But let's look at the balance sheet. They have no current assets. Fixed assets, they don't have any. Intangible, it doesn't show it has any current liability. So it has long-term debt of $1.28 billion. I don't know how I feel about that. But let's look at how much cash they have. So this is very important for me to see how well they're doing financially. If the cash is going backwards, that means financially they might not be as stable as they look. So according to the first sheet that you saw, they had a good profit margin. So what are they spending their money on? So let's look at the cash flow. From 2022 is 6.23 million to 343 million to 201 million. So it's losing money every year since 2022. So that right there shows me they're not good financially. Because if you look at the income statement, they've been making money in 2024. So it should have went up, but some reason it went down. I don't know why it went down. And then in 2023, it did lose money by negative 13%. So, but in 2024, it should have went up. They made money. And that's the thing. I don't understand what they did with the money. I'm not in the company, so they have bad money management, it looks like. They could use it to pay all dividend. I don't know. So the company, let's look who's been buying and selling for insider trading. So they have 2 people that sells in their board, and that's not bad. And the investors, they have BlackRock, Vanguard, and State Street. That's interesting. So that's the top shareholder, and top sellers are State Street, Citadel. Okay, so I'm 50-50 split on it. So based off that information, they do pay a very high dividend yield. A whole 14% according to MSN, or the other ones is 17%. But let's see what AI says. So I love using AI. Why do I like using AI? Because it gathers all the information and then summarizes it in very simple terms. So valuation is 4 out of 6. So probably compared to all the other companies that does the similar, it makes a pretty good thing. Earning, yes, it shows that it earns really good money, but I don't understand how you get that good of earning but go negative in cash flow. That's what I need to understand. Future growth is 5 out of 6. I'm not sure about that. It is a loan company, so it could be have great future growth because it's going down. It might be recovering right now, and AI is trying to predict that it's gonna start going up. Historical performance is a 0. And I agree, it is down. There's no performance. And then financial health is 3 out of 6. I agree with it. It's on course to the cash flow. It's not because it's going negative. Ever since 2017, it's losing money. But according to the balance sheet, they are making money. So the analyst says it's a buy. So let's see the earnings compared to everyone else. So if they compare to all the other investment company, has a 380% earning per share. Yeah, it's pretty cheap, and the earning compared to the share price is higher. Okay, and then revenue growth compared to the peers. So according to this, it has a negative 20 million revenue growth. Q4 has a negative 33 million revenue growth, and Q3 24 it has a negative growth of 40 something million. So it's growing negative every quarter according to this data. Earning per share forecast, okay, it has earning per share if it does go up, but I'm looking at the revenue. The revenue is in the negative. So I'm looking at this stock. The dividend is a really high paying dividend. You know, if you just pick stocks because they're paying a high dividend, this is one of the stocks you can look at and say, oh, they're paying a 17% or 14% dividend yield. Whatever website you use, MSN says 14.93. Stocks dividend says 17 point something. So you have two different dividend yield. So it has a high dividend yield, but you're losing money every year. So the growth opportunity, it might have great growth opportunity because it's on its way up. I can't say it doesn't. But financially, I give this a 0 due to the cash flow. Now, if you look at the balance sheet, it does pretty good. But if you look at the cash flow, it loses money every quarter. So I cannot recommend this stock to anyone because it loses money every quarter. I wouldn't want to buy this company as a business owner. So I wouldn't want to buy this company at all. So if you think about buying this, it's up to you. But personally, I do not tell you to buy this. They're losing about 30 million every quarter, according to the analysts and according to the documents. So it's losing 30 million. It's paying 14 to 17 dividend, and it might have good growth. It's just too much possibility until I see the stock that shows a great purchase in the positive. I'm just not gonna buy it. And this is why I don't always listen to the analyst. You need to look at your stocks because the analyst says buy, but I do not recommend buying it because they're losing 30, 40 million dollars every quarter. I wouldn't want to own no company that loses that much money. Like and subscribe to my video. That's all I got.